All right. Good morning, everyone. Happy Thanksgiving or belated Thanksgiving. As always, we'll do a big picture outlook. We'll go over some top ideas, and then we'll go over any of your top ideas that you guys like to go over as well. So first things first, again, SPY, we're in this very clear uptrend. We don't want to fight this trend. I know for the past few months, it's been very easy for members to try to short the SPY or to find some short setups. But for right now, we're in this very clear uptrend. And you definitely want to avoid getting stuck in the I'm going to short everything for the rest of the year mentality. So again, we're in this very clear uptrend. As we pull into, we have these couple day pullbacks into this recent support. That's when we want to be looking for opportunities, and we're near the resistance area. We obviously want to look to take some profits. And right now we're kind of dead smack in the middle in this Mickey Mouse-ish range. But again, overall looks very healthy, and most of the major sectors are looking very much the same. Again, energy very strong up here. We talked last few weeks about how we expected this retest to kind of hold. It's done that so far. Again, broadly, this is going to be, eventually we'll be buying this 131, 132 area in time, but for now, it just needs time to develop and consolidate as it's been doing. 10-year has been doing kind of exactly what we've been expecting it to after it started to break down a few weeks ago. We see this continuous H pattern, heading lower as it heads into this first major area, this prior resistance. And we'll see if this sends into support or if it just blows down through it and heads lower. So this is good for us on the equity side. It's good if you're looking to buy a home. It's good to see that this 10-year is rolling over. Again, most of the major other sectors and major markets are near their respective short-term resistance, where again, even for the Dow Jones, looks phenomenal right now, up nearly 20% in the last month. But this is not the time to go full risk on when it looks the most perfect, because it is running into major resistance after a major run up, where a few weeks ago when the market was down here, it was very, everyone was very bearish, and now or not we, but most people are very bullish, obviously, after this run up. So we don't want to drink too much of the Kool-Aid. If you're in these names and involved with them, that's great, but you don't want to be chasing a Dow 30 that's up 20% in a month at this point. And again, other major strong sectors, again, healthcare breaking out of its base, a great sign to see that, again, as we start to see more of these bases form in other sectors that are still setting up, that this is probably something that we can expect. We can expect to see some follow through when those sectors are ready. So we're seeing that in the healthcare sector. We're seeing consumer staples run back to its major level of resistance. But again, it's just similar to energy, where it's getting up here very quickly, that it's hard to expect continuation when it gets up here, that it just needs to consolidate, trade sideways for a bit. And then we can look for that break through this 200 in time. And that's going to be very similar to a lot of these sectors. Same thing with the industrials. Utilities like healthcare have already broken out of their little bases. So again, these are good signs to see healthcare and utilities breaking. But some of these other ones, industrials and staples, they also came a very long way, like the Dow 30, but they might be losing a little bit of momentum up here. And again, a lot of the other sectors are all, again, same thing. Consumer discretionary setting up very nicely here through this 230 should be a very good entry when that sector is ready. Biotechs, again, very similar story with a lot of these sectors, all just setting up within their own relative bases, all very good signs for us overall. And the only real weak sector has just been telecom this entire year, as it forms its own mini base down here in its broader breakdown stage. So again, a lot of very healthy and positive and bullish action from basically every sector except the 10-year, which again is good for us as it falls. And this telecom is just the lagging sector, just like energy was, back in 2020. So overall, good stuff to see. A lot of names setting up right now. I know me and Heaven were talking about this. Microsoft last week. We can see the multiple attempts here at this base. I've tried to highlight these arrows like a street light. Red is an avoid. Light turns yellow, you can slow down, and then as it gets closer and closer, you get more of that green light. So we have this little base break in this Microsoft, the 250 that's setting up. DG, we have this blue sky breakout through 260 setting up. Again, earnings in a couple of days, so we want to wait until after earnings. Could be a good opening range breakout setup. This MELI, big wedge forming. one to keep on the radar for if and when this wedge wants to break. It definitely probably needs to tighten up a little bit more within this wedge, but just one to keep an eye on. PRCT was one of Cush's names from a few weeks ago. A name said there's IPO high, still about 10% risk, but definitely sitting up very nicely. So one to keep on the radar as well. And then last but not least is ADM, another blue sky breakout, but still, in a 9-8% range. This is still technically the retest. So it is flagging here nicely, which is good to see, but more than likely we'll need a little bit more time to pop. So definitely some good stocks out there. Last week we took advantage of this MGPI, which is working nicely. A lot of us made some easy money in this monster, and keeping an eye for the next re-entry in this name. So definitely some stuff going on if you're scanning and looking for opportunities. So with that, Heaven, I'll pass over to you. If there's any ideas you want to go over or member ideas.
Yeah, definitely. Let's go over some member ideas. Kush has got a couple. First one, I think a lot of people are looking at it, is this ENPH, end phase. Looking to buy through 325.
Yeah, again, a lot of these blue sky breakouts setting up. Again, this is like I feel like there's a little sneaky time when most people, if you ask about the market, that you're going to say it's crashing or it's going to zero. But then when you look under the hood, you find a lot of these blue sky breakouts. Not a lot, but you find some of them. And this is where you can, put on a very tight risk trade where most people aren't even looking. You can buy this 326 versus 310, maybe 3-4% risk, where this thing, above 326, it's blue sky. So definitely a good one.
Yeah, it looks great. It's in the right sector, all that kind of stuff. I mean, this is a really, really nice chart. Next one Kush has got is this KRTX. So displaying volatility contraction pattern after putting in multiple contractions and a tight pivot under 233.50. Volume profile is solid. Looks ready to go, but a bit more right side basing would not hurt. So he loves this chart.
I mean, again, another, beta the earnings move, but it's holding up fine. It didn't, like this was a major earnings. This had to be something where related to some type of drug for now. This monster of a move, and it still be holding up here. So all very good. Probably good to do a little bit more research on how these earnings were. Because again, they didn't beat, but they had to have done something important for the stock to almost double overnight and still hold that double. And this, again, for most members that are watching this, I don't think you guys were even here during the Kite trade, but Kite was a stock that got bought out. And that was a stock that we were buying in Kite's equivalent within this $140 area. It caught a nice gap up, and then Kite ran another 100+% in a few months, and then eventually got bought out. And it was a very good trade for us. And if we could find out what this news was, if we look at whatever the earnings report was, we could probably find out why this thing got up so much, even though it didn't really do anything crazy from an earnings standpoint. So just another layer of probability of why this probably could be a very good buy up through this mini base that's been forming. So.
Yeah, through 240, stop under 220 or 220-ish. I mean, it's still a little bit wide. $20 on a $240 name is like almost 10%, pretty close. So I mean, kind of like Kush said, I mean, if it can continue to sort of develop this right side of the base, maybe give us another tighter, like another higher low there between, and just kind of have an entry around like that 240 and then have a stop around 230. I think it would be really A+, even if it's just for a move back to 280, back to those highs that it was just at, is a solid move.
Yeah, 100%.
Yeah. Next one, NTNX. Another one from Kusha. He's also looking at this volatility contraction over the last few weeks. 29 is the pivot to keep an eye out on, whereas it seems ready to go after putting in a tight inside day.
Yeah, I mean, I definitely see. I mean, I thought like the other two way more, but I definitely see what he's seeing. Kind of this bigger base working all the way back up to this area. You're buying 29, probably 29.5, but or 29 quarter, versus 27. So I would rather risk the 10% in that KRTX than the 10% in this, but I definitely see what he is looking at here. So
I agree. Earnings in 2 days as well, so you might want to see that happen first, and then we'll see if that's the catalyst to get it above that major level, or if it can continue to consolidate. I think would also be pretty solid. Let's see, next one, Tom's looking at AMPX. I think this one was mentioned a little while back. Yeah, we have that wedge there. I mean, to me, it's like it's almost like when it gets too obvious, it's almost guaranteed to be a trap type of thing, where like it still hasn't moved, and like it's literally gone sideways for and been in this like $1 range for what is that, since almost a month. I don't know. To me, it just like I think it could go, but it almost like I feel like if it wanted to really give us a good entry, it would have done it by now, type of thing. I don't know. What do you think, Ben?
So again, I dislike these cheaper stocks just because again, this $10 stock is like that move to. I know we looked at this name a while ago, and like this was like kind of like a BS print. Like there wasn't really much action up here on that IPO date, so it looks like it spent time up here when maybe 100 shares fired off, or something very insignificant. So it's kind of like disregard that as like real price action. But again, it is super tight. I hate these cheaper names because if you're buying 11 versus 10, you're giving it 10%, and that's like a day one move. Like off the bat, you're giving the stock 10%. And is it really going to go to 16 to give you 5-1? Maybe, but that's best case. Like best case, you get a month or two move to that. It's not going to be a day one, or like I feel like you're not you, but some people might be expecting like this move. And I just don't know if you're going to get that on this wedge. So for me, I wouldn't risk 10% in this name. I'd rather risk the 10% in like a name like this. But again, it is a very tight wedge. The wedge is eventually going to have to break to the upside or the downside because it's getting super tight. So if he could risk 50 cents in this, it might be worth a shot. But I mean, it's going to have to break at some point, so it would be worth keeping an eye on.
Yeah, I agree. Let's see. The next one we're looking at is HEI from Kusha. He's looking at HEI through 163.
Okay. So we're seeing a lot of these like very similar. Let's see if this is blue sky. Yep. There's a lot of these again. Market's still in a bear market, but even though we had a very phenomenal last month, overall, that I don't think, even again, I did like the percentage moves for my own well-being, and I was surprised at the percentages that the market has had, and it seems like no one or no news outlet has really talked about that. But this again, phenomenal looking chart: 163, 164, 165. Within any of those areas versus 160, or what is that, 161? Seems great. This looks like a very, kind of a layup of a trade. You can sneak in here. It's tested this area a couple times. All-time high, retest. A third attempt, little fourth attempt. We're seeing these higher pivot lows this whole way up. Nothing more you really can ask for. And then earnings, you got plenty of time still. You got 2-3 weeks till earnings. Looks great.
Yeah, this looks really good. Volume's a little thin, 230K, but that's just something to keep in mind, and expect a little bit of slippage, but overall just really, really good chart. That's it for member ideas. I had a couple on my list that I posted on Sunday. The first one being this ADM that we already sort of traded through 96, but setting up again through 98.
ADM, right?
ADM, yeah.
Yeah, this one. I had this on my watch. I think this is one you were calling out.
Yeah.
Looks great.
So still got that one. I know some people sold some. I trimmed some into that resistance, looking to kind of add back to that position through 98 with a stop under 96, and trying to get that blue sky breakout. Another one I'm looking at was this CAR, which I know has been on the watch list for a few people. Kind of broke that wedge that you drew out, but still within this consolidation range. Still holding. I think it could go either way. I think there's a decent risk to reward on either side here. We got an inside day on Friday, but personally, I'm not really putting too much weight on Friday's action just because it was a half day, low volume, holiday type of day. So I'm not too, I'm not putting too much emphasis on that inside day. But either way, I mean, either a support buy here or a break of this support, this 220 support could lead to, the downside. So keep an eye on this one for either direction.
This stock blows my mind to begin with. Like, this is a car rental company, and it looks like Tesla. Like, I want to know. I want to figure out what the hell this news was. Like, what did they do this day that this stock went nearly 300% in one day? Like, that's just, this is just crazy. When you think about, again, Carvana is not, the same. They're in car sales, not car rentals, but like,
they're
this
getting destroyed.
yeah, like that. This is like that's where when I see this just like the chart itself is just crazy. And if you do get that break of the web, you probably do get it because this name has, when it wakes up, it wakes up. And it was just getting it when it does. And
yeah. Next one I'm looking at is CTVA. Sort of setting up this low cheat entry, high and tight flag. That's all-time highs up there. That's just sort of flagging there over the last month and a half. Giving us a little low cheat entry here through 66.50. Yep, right there. For probably like a small position, and then for the eventual third time through that 68 over the last month. Yep. So trying to get into that, build a position, and then eventually get that breakout through 68 is the plan.
I like the little sneaky entry like up here where it's like you can get some stock on tight risk and then prepare for that next entry. Definitely with you on that.
Yeah, that seems to be working pretty well rather than trying to just get the full position through resistance. Getting into these low cheat entries, like you said, tight risk, and you're able to sort of work with the fluctuations because I'm assuming it's not going to be a very clean break. If it is, great, but if not, at least we're in earlier and we don't have to really stress about the fluctuations under that resistance too much. You got to get some window shades in there.
I know, dude. I know, it's like
DG, we already went over that one. Another one that's interesting is this Etsy. We had our eye off of this one for quite a while because it was downtrending for a long time. I remember some people were trying to buy that 160 back in March, but the downtrend wasn't really over, and now it's finally giving us a pretty concrete base here. So it's looking pretty good, and it had a decent earnings reaction. And now I would love to see this kind of break this area and try to get in around 120, 125. It might need a little more time, but this 120, 125 definitely a spot to keep an eye on as this base continues to develop.
Even if we talk about like M1 for a moment, because this is like a name. This is one of the names I've been buying since we started to use M1, which was down like in this area. This is like when I started the entry in Etsy, and been buying it every single week. Bought it every single week, and then as it started to, this was the prior all-time highs. This was like that blue sky breakout through here. Once it came back underneath this area, was the time to lower that allocation. So very simply, if I had a 10% allocation in Etsy, this entire run up, once it started to break down, I would take the profits and lower the allocation. So I would go from 10% down to 5%. Now, obviously, after the fact, it would have seemed more obvious to go down to like 1% because ETFs got destroyed. But in this moment, I don't think most wouldn't have expected a lot of the tech names to get as destroyed as it did. But now that it's been developing, like, you don't want to chase it this whole way down. But now that it's been basing out nicely, this is now that time where when I'm at 5%, I can start going to 7% and to 8% and to 9% and back to 10% when it's down here basing. And then when it gets back up here again, be it a year or whatever, I can then start to trim again. So it's broadly buying near these major bases, buying on the way up. When it starts to roll back over, you start to lower the allocation. So that's more with the idea with M1, with these longer term ideas. When you're adjusting that allocation, you're selling on the way down after those new all-time highs get taken out. And after these bases develop, is when you want to start to increase. You don't want to be, trying to catch the bottom here because you never know when it's going to happen. But this base is very defined, and you can either swing trade it through that 130 for sure, or 125. But now is also the time that you can start to increase it if you plan to hold this name. It's gonna, like, for this move back to highs, it's like this is at least a year long move, if not more. So it's not going to happen overnight, but this is the time to take advantage of that if you've been in it or if you're down in it. This is like the time to start being more aggressive with it than the last better part of the year.
Yeah, I'm with you there. And looks like that's everything from my end.
All right, guys. Well, again, we did it pretty quickly. Market is open in a few minutes. A lot of good ideas out there. Call them out. Again, everyone will post those alerts if they're good charts. Again, we got a ton of really good ones on this call. So any questions you guys have are always here, and we'll see you guys in the chat.
All right, catch you later.